Firstly, I said that stop loss and take profits are placed based on market structure, not really based on number of pips. That's the first thing I said, and you need to get that fact. You need to get that fact. You must not forget that fact. You must not, you don't take a trade and say, I want to reach 20 pips. Or you increase your, maybe you're trading $500 account and you take one standard lot and you say you want to reach 20 pips, which should be, or maybe maybe you take one standard lot and you place stop loss at 10 pips and you say that's the maximum you want to reach, which is $100. Well, you cannot be learning that from me. Anyway, there are people doing that. And then you place your trade based on 10 pips. That's you place your stop loss based on 10 pips. You're not acting right. That's one thing I need you to know. You're not acting right. I've said it before, stop loss is placed based on market structure, not based on number of pips. So we want to trade AUDJPY. As you can see, the market has started selling. And as a swing trader, if you're a swing trader, firstly, this daily time frame, you wait for this candlestick that's still forming to finish forming, and you take your trade and place your stop loss above, slightly above the wick of the last candle. That's number one. As a swing trader, this is what I will do. You get that? So let the daily time frame complete. Then we have a clear bearish signal, which is a bearish engulfing bar. We take a trade, place the stop loss above the wick of the previous candlestick, and we take a sell. Then it's good. That's one. Two, if I look at that, what's it called? The stop loss, and it seems too far for me. It seems too far for me. Let's say I'm intraday trading. I'm a day trader. I could place stop loss in this other location. Let me show you other locations so you can place stop loss here. That's one. That's two. Okay, so if I'm intraday trading, those are two places I could place my stop loss. And this is another place, although this will be very tight for those who like very tight stop loss. That's three. So why did I choose these locations? Why did I choose these locations? Because I think that's a logical question to ask. I said stop loss is placed based on market structure. And what's the market structure that makes me determine these locations as stop loss? When I talked about placing it above the wick of the last candlestick, I think I explained that. Now, in this case, number one, look here. This first place I place the stop loss. You can see that this above it is a seeming, or you could call it head double top, and I placed the horizontal line. I placed the horizontal line at a location where we could call a support. So it was a previous support, and it has turned resistance for this. For these candlesticks, it's a resistance. For these ones here, it's a support. So if the market chooses to buy from here, there are chances that this location or this region will hold it as a support. So it's likely not to pass there. Then this is another support that turn resistance. I place my stop loss there. This is another support that turn resistance. I place my stop loss here. So you place your stop loss in this type of locations, knowing that if the market reverses, it's likely not to break that region, but if it breaks, it will go a bit far. So if you're not willing to reach that much, then you place it here. So let's say you don't want to reach more than this to this, but let's assume this is 30 pips. And maybe you're trading a small account. You don't want to reach more than 30 pips because you can't reduce your lot size more than what it is. Maybe you're trading a $50 account and you're trading 0.01, which if you lose 30 pips, that's already $3, which is about 6% of your portfolio. You don't want to reach more than that because if you move the stop loss to this point, that could be like 60 pips, which is quite much for your account. So you place it here and let the market run, knowing that if the market choose to buy and get to this point, you'll be triggered out of the market. It means you're not willing to reach more than that. But if it passes this point, it is coming here, and the distance between here and here is going to be much for you. You're not willing to handle that. For that reason, you place it here. I don't know if I'm explaining, if it's clear enough. So you place stop loss based on market structure. That is how to place stop loss. So you can see what I've explained. You place it here and let the market run. So if you're willing to reach up to this point, you can place it here. But what's advisable is this. You place your stop loss should be far enough to give the market sufficient space to express itself. That's what's advisable. That's advisable. Place your stop loss in a location that's far enough, giving the market sufficient space to express itself. Now we've talked about stop loss, and I believe you understand that. Okay, another means to determine stop loss location is using the Fibonacci tool. So let me clear these horizontal lines. Another means to place or choose stop loss location is using the Fibonacci tool. This market does not score that. Let me see how it will go. Remember, we said that you use the Fibonacci tool to determine that the Fibonacci retracement to determine how far a retracement is likely to end. And like we know, this is a retracement. Like you can see, this is a retracement. And this is where the trend started. Get to the 4 hours. This is where the trend started. So when the market, every retracement is firstly expected to end at the 50 mark. That's first of all, it's likely to end at the 50 mark. And look at the 50 mark here on the daily time frame. You see this region? Can you see where I place it? Anybody who would like to take this trade, it will be at 10. This 50 mark will certainly be at 10. When the market gets here, it's likely to start buying again. It's likely to start buying again. So if the market was trending, like it was trending here, you see it, the market was trended from here to here. This is an uptrend. In fact, in the long term, the market will be buying. So a retracement started here. Where do you expect this retracement to end? It's likely to end on the 50 mark. That's the first place to consider. There are chances that it will sell below the 50 mark and it will end in between the 38.2 and the 50. But the 50 mark, if you don't want your stop loss to be missed, 50 mark is a very good place to place it. Then you can place your stop loss above, you can place it at the 100 mark, which is here. If you saw the trade early, maybe somewhere here, you could take a sell, target the 50, place your stop loss at the 100 mark. This one. Then if the market, let me take the Fibonacci off. Take off Fibonacci tool. But if the market just started a move, let's say just started buying, like here, remember when I talked about where to use the Fibonacci tool? I said when the market makes this type of shape, this is a lower low, a higher high, and a higher low. When the market makes this type of shape, where the higher low does not come to the same region with the lower low, you can use the Fibonacci tool here. So what do? You pick the Fibonacci tool, place it here, place it at the higher high, and drag to the lower low. Now remember, you've seen a bullish reversal candlestick pattern here before you make that decision. You now believe that it's going bullish. So let's assume you're seeing it here, which is at the 50. This is a 50. You could take a sell, take a buy, not a sell. You take a buy because this is higher high and higher low, which is sign of an uptrend. I've said that before. So you take a buy and you place your stop loss at 38.2 or 23.6, but mostly it's the 38.2. In this case, you could see the market getting very close. Probably it would have triggered it. Of course, that would be a stop loss fund. Trigger it and buy again. So you may want to enter again, maybe somewhere here, and you place your stop loss at 50. But your target will be, your TP1 is 100, which is here. And you can see, of course, it's at 10. TP2 is 161.8, which is here, which is also at 10. And TP3 is 261.8. This will take a long while. And this part of Fibonacci is called Fibonacci extension. This part is called Fibonacci extension. Now listen, the Fibonacci extension mostly work. In fact, that's the only place it will work is on a trending market. That's the only place you use it, is in a trending market. So you use it to determine take profit and stop loss, like I have explained. But when the market is not trending, let's say it's a range bound, you buy at the support, you place your stop loss slightly below the wick of the last candle, and you sell at the resistance, place your stop loss slightly below the wick of the previous candle. Then your TP, if you're buying at the support, your TP should be the resistance region. If you're selling at the resistance, your TP should be the support region.